All right, today I'll be showing you the boom and crash strategy. It's one of the simplest because it only uses price action. Price action, in my own terms, or rather definition, is knowing where the market is going. Simple. The direction of the market, what happens next. And to know where the market is going, you must make use of one, your support and resistance, two, your Fibonacci, three, candlestick patterns. And in boom and crash, we only make use of uh, three patterns or candlesticks. Number one, morning star and evening star. Then we also make use of the bullish engulfing pattern or bearish engulfing pattern. And then there are structures like head and shoulders. We also have double tops and double bottoms. Once you master this one, you will not regret. Okay. So first of all, go to your daily time frame and then mark your support and resistance. And to do that, go to line chart first, like this. Why are you in this? You want to know the points where the market could not proceed going up or down. For example, here we've got 1 and 2. Because if we come to this, you'll notice that we are still in the area, this place. Okay. So make sure after doing that, you lock. For support and resistance, we put our line where the body closed, not at the wick. For the wick, we make use of them when we are drawing our trend lines. Okay, so remember, this is our other point. Why confirm? As it is, support and resistance are only where the zones are. It's not a single line, which simply means it may be this. This is a resistance zone. It's not a single line, meaning that a spike can happen either from here. It can happen here, it can happen there, it can happen here, it can happen here. All these are zones. All right. Just like I could put the same thing here. I could put it there. It's a zone. It's not a line. So you expect your support anywhere around here. Unless if this whole area is broken, that's when we call it as a broken support, or this whole area is broken, we call it as a broken resistance. Of course, how do you notice that this is a broken support or broken resistance? Number one, every broken resistance or support has a very high momentum. The candlestick that breaks that zone is usually very high, very strong. In a quick time, it breaks. So anytime that you are trading either boom or crash, step index, volatility 75, any candlestick that goes up without leaving a huge wick has broken that. To determine the breakout, we're looking at the candlestick strength, candlestick momentum. How is that momentum? When the momentum is high, it doesn't leave a wick. A wick is a sign of rejection. That means even if the candlestick broke, in this case, like this, let me show you. If the next candlestick will break this area in this manner, leaving a very small wick like that, that is a qualified breakout. But if the wick is small, is long, if the wick is long, like this, I don't think this can be considered as a breakout. This is a rejection. That is how come you are trading, you see the price going back like that, like that. Why? Because it was not a breakout. That was a rejection. All right, we continue. So each time you notice this, you expect sale activities. Besides, you should know the pattern. What is currently happening here? This is a triangle, a rectangle. This is a rectangle. All activities are in one. Okay. So after drawing in the higher time frame, you also come to the lower time frame. You also go to the lower time frame. And in this case, we are going to H4. And in H4, you zoom out as usual. You zoom out as usual. Identify those areas like this. Change the color. Change the color. In this case, let us use pink. No, it's too light. Let's use brown. Okay. Why are we changing the colors? In order to remember where you saw that. Wherever the color is, that simply tells you where the activity happened. 1, 2. We're identifying points more than 2. 1, 2, 3. Around 2, like that. Okay. For example, all these areas are resistances. All these areas. It was a support, it's now a resistance. Those are major. Okay. That's what we call. Then lock this. Lock. You know why you are locking? Because each time you click on delete, everything goes and you miss the points that you selected. And remember, make the lines thick as possible as you can. Go to H1. In H1, still zoom out. But remember, the higher time frames are more important than the lower time frames. And our analysis currently is just done in the higher time frame for now. Then, after doing this, you go back to D1. revert to this. What do you want to do here? You want to identify the trend lines. So we've got this trend line coming from there, and to there. And this one, the trend lines, we put them on the wick. We put the trend lines on the wick. Like that. Our concentration when we're trading the trend lines is based on the trend. We don't buy when the market is going down. When we see a trend line, our major activity should be selling when it is in the downtrend. As it is now, our major activity is sell. So if you held the trade from here, from this point, you are selling. You don't sell from here, no. You wait for point 1, 2, 3. On the third point is where you sell. And wait for the other point, like 4. When this is touched, you sell again. I said, don't sell at 1, don't sell at 2, sell at 3. Why? It's a confirmation that this is a trend. It only becomes a channel when you have the base like this. So this one has become a channel. All right. So there are things that we look at, especially when we are trading trend lines. By the way, I am a payment agent for binary. Only those that are in Zambia can make use of our services. On DP2P, we can process any deposit, any amount, or any withdrawal for you. It's instant. You get the money quickly than waiting for hours for binary to process for you. All right. So even as you are looking at this, you come now to H4. You want to identify. Remember, we've got different colors in here. So far, another one I can notice is that there is a trend line here in H4, but we change the color to make it look attractive and amazing. Change the colors so that you can distinguish between H1, H4, and D1. So we have this. You may be asking, how do I select the lines? Just select the ones most visible to your eyes, are the ones that are important. Okay? Just something you can see. Meaning that the H4 one can be used to scalp. The H1 can be used to scalp. The D1, we use them to hold. Notice that there is a reversal before this touch. It happened because of this area, because it's a zone. It's a zone. It's a zone. So each time you see a breakout, there is a retest, then there is a continuation. Okay, I'll basically drop more on this subject. Remember to subscribe to our YouTube channel and also make use of us on DP2P. My phone number is 0964 62 16 24 plus 260 964 62 16 24. Make use of our services. We also train Forex in depth. This is just an introduction of what we basically do. Go on through the videos that we've done. You get the full concepts, and rather book for a VIP one-on-one session. It's 3 sessions, course, full course. All this is included, where I teach the sniper entry strategy, either on boom and crash, and I also teach how to catch spikes, then how to make a step index, proper credible strategies. Remember to subscribe, click on the notification bell icon so that each time there is a video, you'll be able to see it first. Otherwise, thank you. Shalom. Remain blessed.